Bitcoin bulls are paused at the gates. Hey guys, it's Keith Allen. Oh man, a lot has happened here in the last few hours. You know, they say what a difference a day makes, what a difference a few hours makes. I mean, things are really changing rapidly here in the order book and, of course, in the charts. We're going to look at all of that and see how it translates into what is happening now and what we can expect in the future for Bitcoin price action. I mean, this has just been amazing past couple days. You know, yesterday, obviously, we saw a big move to the upside coming off of inflation data. The market really responded. I mean, bulls absolutely, literally the second that inflation data was released yesterday, bulls literally stampeded. They went on an absolute run, and I'm going to start by showing you some candles, and we're going to look at some different metrics and see if we can make sense of this all, because I think the move that's happening right now is what I expected, and you know what, that brings me to another point. I really have to work on getting these analysis out earlier. It's been a busy morning for those who don't know and who are new to the stream. Hey, welcome. Thanks for joining me. My name's Keith Allen, and I'm where you're going to find an unbiased look at the market. Okay, I'm going to show you what I think is bullish, what I think is bearish, what I think needs to happen for each scenario to play out, and also know that I'm a work from home dad and I'm running a couple of businesses, so I'm doing all this in between. It's a juggling act for me, and I do try and get these out as early as I can. And literally between the time that I wrote this and the conference call that I just got off of, and now a lot has happened. But you'll read about this in the analysis. For those of you following along on Twitter or X or Twix or whatever you want to call it, I'll add those descriptions after the live stream. But I'm trying to get these out live and get them to you soon. So I will add that description for those of you who have asked for them. They already exist on the YouTube version, but I will add them to the Twix version here after the stream. So let's go ahead and share screen and climb right in. Let's get to this one right here, because this is what I was concerned about initially, and that is this pullback here after, you know, as you can see, big run yesterday, right? This was what, a 7.5% candle, and now we're seeing a pullback. And where's it pulling back to? It's pulling back to test this 50-day moving average. This is important, and I'm going to tell you why. We're also going to look at something also important here in terms of moving averages, and that is this death cross between the 21-day moving average rather, and the 100-day moving average, right? So, you know, you see a death cross and you go, why is price moving up? Well, it's not uncommon for that to happen, but it's also not uncommon to see things consolidate or potentially grind lower here after things settle down a little bit here. And to, rather than speculate on that, let's just look at history and see what history shows us when these events happen. Let's go back to the last one, right? And the last one happened, I guess, looks like August 21st of 2023. And you could see that, you know, price went down. And this is a lagging indicator, okay? Moving averages are a lagging indicator. So this is definitely a lagging indicator. And most of this move is obviously played out to get to this point, to get to this death cross. But look what happened afterwards, right? We did have a bit of a pump, and then things leveled out. We got another pump, and things corrected, consolidated before we actually got the bigger move up. Let's go back a little further, right? Death cross, pump, and then a correction. Let's go. This was when? This was in June 5th of 2023. Let's back it up even further, right? They're not all the same, right? Sometimes it's different. Doesn't mean it has to happen exactly the same this time, but here's another one, right? Death cross on a green candle. Boom. Got the pump up. Then what'd we get? A correction. And then some consolidation, some further downside. This was actually like, this was bad. This was bear market stuff right here, right? You see the death cross on the 50-day moving average, and then the 100-day moving average, which isn't dissimilar to what we're seeing now, by the way. Keep that in mind. Here's another one. Back in December of 2021, this was already after the market topped. We had also, this was really when the bear market was in full effect. We first crossed the 50, then we crossed the 100, and then this is, you know, the 200 all over but the crying right here. So in this instance, again, we did see a pump, and then things pulled back, consolidated, pumped, and then the rest was history there. We'll go back even further. Why not? Maybe we can find something positive here. This was after, this was when? This was May 17th, 2021. Here's the death cross, and things just continued on a downward trajectory here on this one. So they're not all the same, but certainly worth paying attention to. This was actually around this. I'm gonna call this one a bit of an anomaly because it was the COVID crash. So we'll get right past that one. See if I have another one here highlighted. Here we go. Here's another one. Again, this was coming off the top. This was really validating bear market move right here. Okay, so difference here. These were clearly bear market situations. Don't know that we're necessarily in that situation. In fact, I don't think that we are in that situation at this point. Lots of bullish things to think about fundamentally as well. But do know that we did have this death cross on the 50-day, and now we have it on the 100-day. And this could, this move does have a tendency to get worse before it gets better. If we should happen to get down to this level, then we have real issues that we need to discuss. But at this stage, let's talk about what's happening here at the moment, right? So at the moment, there's a retest here to the 50-day moving average. That was expected. If this breaks through, then I expect to see this one hold. Now, this has been very difficult. This 21-day moving average, we've spent a lot. There's been a lot of drama around this level. As you can see here, we have been, how long has it been? It's been since the middle of March, okay, when we initially lost it, and we have been trading punches up and above this line here for quite some time. Also, we had that drama around the 69K level. This is a very, very important one to me. This, to me, is what really gets us into breakout territory. That has not happened. So it's been a while since we've been handily above this 21-day moving average. We now have, for the first time, a full candle body above it that has the chance to live above it. Same situation with the 50-day here. Is this going to hold? And this is something that we have to keep watching. Now, again, like I said, it's not all bad news here, right? The fundamentals to me are still quite positive for Bitcoin. Still bullish in the long term as far as I'm concerned, but this could lead to more of a short-term move, in my opinion, that could potentially bring us down to retest again at this 21-day moving average, and potentially lower here to the 60K level. I would have no issue with that. Of course, we've not tested this lower low, which is at 56.5. And in my opinion, seeing that happen would be conducive to, if it held, that would be conducive to giving us higher lows and a better foundation for the next leg up. What I like about this, I'm going to move to the weekly chart for a moment. We discussed this yesterday at length, and that's that the 21-week moving average, that I also think has a lot of merit here, is just above that lower low. It's now sitting just above 57K. So if we were to get this retest, to me, the best, most bullish case scenario would be a retest down to the 21-week moving average, hold it, and then start building our way out, eventually up to this 2021 top at 69K. Let's get full candle bodies above this, and then we can really start talking what a real breakout looks like. So that's just part of the narrative here. So in terms of other things that are bullish, in my opinion, obviously this was a busy week in terms of volatility, and that volatility triggered by Fed announcements, or I should say Fed Chair Powell's speeches or comments on Tuesday, and all of the data that's come out Tuesday, Wednesday, and Thursday. Hearing Jay Powell say that he still thinks that there's a possibility of rate cuts coming through the year, and the possibility of a rate hike is not likely as their next move. I think that's important. I think the market responded to that, and that was something that got things moving a little bit. The other things that got things moving would be just the sheer economic data that came out. According to Powell, Tuesday, this PPI report, he said it was a mixed report. I thought it came in, I just look at the numbers and think it comes in a little bit hot. I'm no economist. This is just my take on things. It's just a regular dude looking at these reports, and they were a little bit hotter than expected. But when they went through the adjustments and they extrapolated, food, energy, trade, et cetera, according to Powell, he called this a mixed report. I'm not sure how you see mixed out of this. Everything looks hotter than it was before. So do what you will with that. The market really did not overreact to that. Uh, they really kind of it was a bit of a nothing burger, but the positive vibes of or tone, I should say, of what Powell put out that day and his take on it gave the market some more sentiment in the positive direction. And then Wednesday's numbers came out. The core inflation data came out, and these were good numbers. This was better than expected, better than forecasted, lower than last month. And so this is really what got things cooking yesterday. Literally, as soon as these numbers were released, we saw the market react to that. Now, today we had another set of numbers, right? We had our building permits and housing starts, and of course the jobless claims. And I had posted earlier that bad news equals good news in terms of the Fed, in terms of the potential to cut rates. Well, this was also a little bit mixed, but I think net positive in terms of what it means for the potential for rate cuts. We did see a reduction in building permits, and what that means, like when we look at these housing starts and building permits, it means like, is there more construction coming up or less construction coming up? And this is showing a decrease, right? This was a miss. 1.44 million versus what was forecasted here was certainly higher. This was also lower than last month's readout. Month over month, lower than the previous. That's in terms of what the Fed is looking for. That's exactly what the Fed is looking for in terms of potential, consideration for rate cuts or rate hikes. Housing starts also a major miss, right? The consensus was 1.42 million. We ended up with 1.36 million, and so on. So in terms of jobless claims were a little bit lower this month than they were last month, but they were higher than forecasted, than the consensus here. And then we had continuing claims, and to me, this is more important. Continuing claims and the 4-week average claims, they came in a little bit hotter. So it was mixed, but I think in terms of what the Fed is looking for to consider cutting sooner than later, this is what Fed watchers more in line with what Fed watchers wanted to see. Something else that obviously we're watching is the ETF flows. And we can see that yesterday, another net positive day, pretty good, solid day, 303 million, including Grayscale buying. They had sold the day before, but they bought yesterday. And notice the previous 3 days, yesterday, as well as the 2 days prior, that BlackRock did not buy. And we're net positive despite BlackRock not buying. Why did they not buy? Well, for starters, they bought when prices were lower, and maybe they, like myself, feel like price is going to correct, go retest support, and they'll have a chance to buy lower. That's what I'm thinking, and that's what I'm reading into it. You interpret it however you do. Of course, nothing I share here is advice, just my own take on things. One more piece of news I thought was really interesting. I came across this morning, is that CME is planning to launch Bitcoin trading. Now, imagine that. Okay, this really has the potential to kick the door open on adoption in a number of ways. Number one, it opens up, in a wave of, apparently renewed institutional interest. There is a, opportunity for those people who are not comfortable trading on crypto exchanges to trade on essentially a legacy financial house. So with CME, they would have the opportunity to do this. This has not been confirmed yet, but just imagine if this happens. Would this be like a gateway to Ameritrade and Charles Schwab and E-Trade and these other retail outlets adding Bitcoin and potentially ETH and some other alts? Too soon to tell at this point, but the fact that they're even having the discussion, I think, is really important and could have merit. Would this mean that they trade only during banker's hours like TradFi does now, or does it mean that they would open up to 24/7 market? Those are all things that need to be worked out. I would imagine if they were only trading during regular TradFi hours like the ETFs do, that would potentially put those traders at a disadvantage because we see so much volatility happening after hours and on weekends, et cetera. I personally not a fan of the 24/7, 365 aspect of trading crypto. Just selfishly, just for my own work-life balance. I'm a work from home dad. I got kids. I got a family. I don't love the fact that I could be getting ready to get in bed at 11:30 at night, and then boom, my alerts are going off, and I got to go, deal with some trades. But I'm also not willing to walk away from those at this point. So, will that happen? Will that be what those traders sacrifice for the comfort, the heap of risk they would mitigate in terms of counterparty risk, trading on a platform like CME versus the traditional crypto exchanges? That remains to be seen. Or maybe they open it up to 24/7. I don't know. Those are all things that I would be watching for if it were me. And the way that I do it, I have major concern over the counterparty risk of exchanges because I've been burned. I got burned by Cryptopia. I got burned by a bunch of smaller exchanges that I no longer trade on. And of course, as a U.S. citizen, I'm no longer allowed to trade on a lot of exchanges, including Binance, which is the biggest one. And I was on Binance US for a little while, but they were having their own issues with banking, and it just was a little sketchy. So I feel like the safest place for my money and my peace of mind is on Coinbase. So that's where I trade at the moment. Again, what you do is up to you. That's just how I'm doing things. So let's go ahead and get back to the charts here. Another really, really interesting aspect. Oh, look at this. We have lost absolutely obliterated the 50-day moving average. So this is exactly, quite frankly, what I wanted to see. Something else noteworthy today is that TradFi hit new all-time highs, right? The Dow with a 40,000, cleared 40,000 today, went up to what? 40,051. That's an all-time high. S&P also in all-time high territory. What does this mean, right? So obviously this is long-term a macro bullish move, but what happens historically when the Dow hits these really historical levels? What happened at 30K and 20K and 10K? Well, rather than speculate, let's look at the freaking chart, right? Just blows my mind that people will just, speculate and not take the time to look. So this was when price was at 30K and not a huge pullback. And of course, the Dow doesn't move nearly as large as crypto markets do, but a 2% pullback here after hitting that 30K before moving on with its upward trajectory, right? Let's go back further to the 20K mark. Same thing, right? Less than 2% pullback before moving up. And keep in mind, a 5% correction is a big correction in TradFi. Okay, so let's go now to that 10,000 level. Same thing, right? Here we go, 4.5% correction here before things continued on its upward trajectory. So this would be, the TLDR version of this is short-term pullback, long-term macro bullish. Okay. And I think that theme carries out through what we're seeing in crypto as well. So now we go again back to the Bitcoin chart, and we can see we've now lost that 50-day moving average as I expected to. And now where does the correction go? Where do we go? Will we go back and test this 21? That would be good, man. If it holds, that would be solid. But again, I'd rather see, to me, the stronger move is to go back and check and test this level down here. And if that were to happen and we were hooked up with that 21-week moving average, that's the big move in my mind. That's the dream move for me. I don't know that it happens. Of course, if we lose this This is my next area of interest, this 50 to 52K range where we had a brief period of consolidation. And if we lose that, then we're dealing with this 44, 45K level. And that would be, in my opinion, dangerous because that puts us at risk of not only death crossing up here, but potentially death crossing down here at the 200, and that would trigger bear market. That would be a comfort for me. That would be bear market. Now this would move too, by the way, right? This would come down from here. So keep that in mind. This is actually at the moment at this almost at the 52K level. So if we were to grind down further, this would also edge down a bit. So we're not there yet. In terms of where liquidity is now and what's holding things up or pushing things down, let's look at fire charts. And you can see, I started this out by saying what a difference a few hours makes. Look at this. This is not even this is like, let me move into a shorter time frame here. We've seen a complete change of where the liquidity is positioned, right? Within the last few hours, actually. This has dropped off. This has gone away. This was resistance rather, that was holding things down. It's been pulled, but we're now seeing things. Actually, some of this looks like it may have moved up, but we're seeing things break down here. But we've got new support coming into this range, likely trying to front run this 60K level. Let's move in even to the daily chart and see if we can get any more readout on what's happening here. So you can see actually much of this resistance seems to be dropping down on price, pushing price down, looking for the fill down here. This is at what? Okay, so 64K. We had we had a wall there yesterday that got pulled, right? Before the news came out. We had a look at this. This wall got pulled yesterday. This was just before this was hours before the economic news came out. We got that bump up, and then this wall appeared up here as resistance that held things in place up at that 50-day moving average, and now it's breaking down. So I'm interested in seeing more of this breakdown, and I would be quite happy to see it move even lower than this. At the moment, this looks like it's trying to create a landing zone. We've got about 9 million, 10 million, 10 million, and another, we'll call it 20 million stacked right here. With more below, right? Really more like 30 million stacked here that could hold things up here around that 63.5K level. So that's inbound. We're watching that at the moment. If it doesn't hold, then we're going to go lower and lower. And so let's see how things shape up. Look at this change in liquidity as well, right? This looks like it's actually could be related to this ladder right here, which means they don't have the utmost confidence in this, and they've put a bid down here as well. So this, what do we say, 56.5 is actually where the lower low is. That would be right up here, right? So this is what you want to see hold, in my opinion. That's what I'm looking for. Hope that gives you guys some insight of what's going on, and I hope you appreciate the commentary here. If you are digging these live feeds, please do me a favor, smash all the buttons and help me grow this channel. If you've got a comment, leave it, share it. And I promise I will engage with everyone as I do each and every day. If you have any questions for me before I wrap this thing up, you can throw them in the chat right now and they'll pop up here for me on the live. Otherwise, I'm going to wrap it, and then I'm going to keep an eye on things. Obviously, if I see any major developments, I'll do my best to update you guys later on in the day. With that, I'm going to call it a wrap, guys. Thanks again for watching. Thanks for the continued support. I truly, truly appreciate it. And hopefully we're all going to ride through this thing together and end up on the right side of the trade when it's all said and done. Manage your risk, stay in the game for the long haul. And as always, trade safe, my friends, and have a great day.